Welcome to the REI Diamonds Show with Dan Breslin, your source for real estate investment jewels of wisdom.
Welcome to the REI Diamond Show. I'm your host, Dan Breslin, and this is episode 120 with Scott Shatford on how to analyze the Airbnb short-term vacation rental market. Along the same lines I've been talking about for a few weeks now, both spotting and capitalizing on trends and the Airbnb phenomenon, today's episode will be an enlightenment to anyone interested in how to do exactly that. How to best capitalize on the Airbnb trend. Over the last 3 to 4 years, I've personally experienced huge growth in my business and investments. And one of the things I've started doing during that time that I haven't done prior to that is paying much closer attention to the numbers. And I'm not talking about just the ARV, resale price, renovation costs, rental amount, and purchase price. I've always paid attention to the numbers in the deals I was doing, but more along the lines of watching, the world markets overall and the trends that make things tick at the macro level. So when I began looking into Airbnb, the first question I ask is, what numbers are important? And then I want to know, are there any other comps? How can I find out, which Airbnb property is performing at what level? Where's the data so I can find the best places where short-term rentals work? And then I found Airdna, the largest database of short-term rental information on the planet. Even the hospitality hotel industry uses Airdna for research when other information is unavailable. So today's guest, Scott, is actually the founder of Airdna, and this guy knows the numbers. And I was personally really excited about this episode, and I'm sure you are too, so we'll jump right in. All right, welcome to the show, Scott. How you doing today?
Yeah, doing great. Thanks for having me.
Nice. I'm recording from Chicago. Whereabouts are you at right now?
I am based in Denver, Colorado. This is where our headquarters are located. Also have an office in Barcelona, but I'm mostly in Denver.
Nice. All right, cool. So for anybody who hasn't heard of Airdna or Scott Shatford yet, do you want to give us the backstory, how you came up through real estate, Airbnb specific, and then made the shift and transition into doing what you do today, and then like a brief version of what the business looks like now, Scott?
Sure, yeah, sounds great. So I spent the majority of my career in data and analytics, about 12 years. At a consulting shop for the most part, really working on business intelligence and data. Was laid off from that company in 2012 and sort of fell into real estate and Airbnb. While I went to go travel the world for 6 months, I listed my Santa Monica apartment on Airbnb at the recommendation of my neighbor instead of getting a storage unit, moving all my stuff in there. And, quickly realized how easy it was to, make money on my, 1-bedroom apartment in Santa Monica and, make more money than my actual rent and all of my cost of renting the place and all the maintenance and utilities. So I got back from my trip and, decided to kind of push off real world job for a bit longer and see if I could, acquire maybe 5 more units in Santa Monica. The money was just really, really easy, and I was just really kind of geeking out on this like new space, right? I was renting a $3,000 bedroom, $3,000 a month apartments in Santa Monica, and then was able to do $7,000 plus a month, consistently throughout the year on Airbnb. So I got up to 7 of those places, and then I kind of took a step back and said, hey, either I'm going to build out 1,000 unit portfolio and go that path, or I'm going to kind of leverage my skills in data and analytics to kind of bring all this intelligence and information, competitive insights, market insights, to all the other entrepreneurs out there around the world trying to do the same thing that I was. So that was sort of the genesis of Airdna, launched in 2015, really to kind of, create all of the data and intelligence to empower, short-term rental entrepreneurs around the world. And, so we're about 3.5 years in and, it's been a fun ride.
Nice. Yeah. I've been in the business of real estate, flipping houses, wholesaling houses, holding rentals, you name it. Just kind of that, whatever we can do to make a few bucks Not necessarily like, hey, this is our laser focused strategy, but for 13 years now, and we're at the point now we're in 5 different markets. We're in Chicago, Philadelphia, Miami, Tampa, Atlanta. And we do anywhere from, 25 to as many as 50 deals in a single month. So it's like chaotic. But the thing where I'm going with this, Scott, is my mindset has shifted. So I kind of I'm like an uneducated rube. I didn't have a college degree. I never got into statistics, never had much formal education, kind of figured out this business just on the fly. So it's been recently in the last, I'd say 2 to 3 years that I've really sat up, started to pay attention to trends, started to pay attention to numbers, because I've noticed like when I start to analyze numbers, comparable sales, information, whatever little data pieces that I can find in a market, I've been able to pinpoint areas of cities where we've won and we've literally, made millions of dollars in profits as a result of these observations. And so now I'm looking and trying to find even more places to be even more specific with the data. So I think it's really interesting, and that Airdna is full of so many data points. And to give you a little background so that as we talk about, where we go for the rest of the episode, Scott, I have just one unit. So I have maybe 14 or 15 rentals. I have a 3-unit in Chicago in the Humboldt Park section. A friend of mine was like, hey, we're doing this Airbnb thing, and, you should try it out. I had just renovated the unit, was getting ready to sell the whole building because I'm not very fond of my rentals to begin with. And he's like, hey, it will probably work. So I am about a month or 2 months in. I'm right at the beginning. And then I discovered, when we met at the Cranes event here, and you were one of the panelists speaking on Airbnb as a trend in general here in Chicago, you were the expert, knowing the numbers, knowing the data, having much more intelligent and exact answers to the questions with the data attached. And the listeners on our show really appreciate that. I appreciate that, and that's why I wanted to invite you. So I'm just at the beginning of the Airbnb, but I kind of view it not necessarily as, a business model, or I want to get 1,000 of these, or I'm trying to scale up, but more as like a corporate housing. So when I have business partners coming to town, and I may do 3 or 4 more of them and try it out in specific neighborhoods, but more as corporate housing for family and company members to come, and then I can generate income when nobody's here, which is probably 95% of the time. So that's like the background that I'm coming from, and we've had quite a few guests on here that were doing Airbnb as a business over the years, a few of them in coastal cities a few years ago, maybe 2 years ago. And then more recently, we had a guy here in Chicago who was flipping houses, and while these flips are waiting on the market, he's listing them on Airbnb. They're already staged. He's no longer doing price drops on his fix and flips. And he went, he changed his cash flow from negative $35,000 to, after expenses, $45,000, $50,000 is the total amount that's coming in from Airbnb on those like 15, 18 properties. He's making $10,000, $15,000 a month, and he no longer cares if any of these fix and flip properties sell. So he doesn't chase the market with price. He's refied out of a few of them, and we've had, some interested people in the audience, and here we are today, you and I, to talk about the numbers. And I think, a more exact and scientific approach, the data-driven approach that you've developed. Is there a specific thing? Let's go back to yours. So you got, 4 or 5, was it, in Santa Monica area in the beginning?
Yeah, I got to 7 properties in Santa Monica, and I didn't acquire the properties, right? I was going through this, rental arbitrage is how I thought about it, right? Long-term rentals were X and short-term rentals were Y, and where was the greatest difference between what I could rent, as a corporate, a lease, an apartment for, and what it would actually sell on Airbnb. So, for me, it was really simple, just furnish it with, $5,000 of furniture, 1-bedroom apartment, get it across the street from the Lowe's or the Four Seasons that was charging $400+ a night, and charge $300 a night, but offer more square footage, more amenities, cooler stuff, the living room, balcony, and just, undercut the sort of the high-end hotel across the street. And it was, wildly successful. I was at, 98% occupancy, $300 sort of ADR, over the 3 years that I ran those properties.
Nice. So you did mention near hotels. Are there any other things you did to specifically select those properties back then before you had data at your fingertips?
Back then, I think I just sort of Yeah, I was really fortunate that where my apartment was right like 3rd Street Promenade, right by the beach, like tourist central, right by all the expensive hotels. So I kind of stumbled into it, in a really, really nice location. So I didn't have to think too hard originally. But it was really when I got to sort of like 5 properties and I was thinking about, regulatory risk, and I was thinking about just, diversifying, my portfolio in some different places, and I started really get analytical about it. And so, that whole process is a long story though, right? So I started scraping Airbnb, basically every property in California, looking for other coastal communities that I thought, might have a better margin than what I was seeing, because Santa Monica is, a fairly expensive market. It's probably one of the most expensive housing markets in the U.S. And so I was looking at kind of where I could be starting to purchase properties across the coastline where there was a lot of tourist demand, expensive hotels, and maybe that Airbnb hadn't caught on, there as much as it had in Santa Monica. And so that's kind of where the journey began. It was really for my own investment purposes, looking at what properties were earning, how occupied they were, how sophisticated they were doing their pricing. And so really trying to come up with like what properties would earn up and down the coast of California as a short-term rental property.
And that led you to developing this and tracking this and putting it together and compiling 4 million plus properties around the globe to build out Airdna as it is today, right?
I mean, that's right. I mean, so I reached out to all the guys around LA and really around the US that I saw that had 25 plus properties. And so at that point I was like, hey, I've got a lot of interest from a couple of my buddies that are doing the same thing as me. They're looking at how to expand their portfolio. They're looking how to price more intelligently. They're looking about, how they're performing versus their comps. Basically they're just maturing from, a bunch of just like unsophisticated entrepreneurs into like real hoteliers, right? They're really thinking about the market, the trends, how to market their properties more effectively, what their comps are doing, successfully. What happens if you add a jacuzzi to a property, how much more of those properties are earning, right? So really just started dissecting, the properties that were doing well and, how they sort of kind of replicate that winning formula. So yeah, I mean, I think with any good company, you reach out to, 20, 50 people and you say like, hey, I got this idea, how does this help you? What do you need? What sort of decision factors are you thinking about on a regular basis that you wish you had more data to back up? And, so after doing, a couple dozen of those calls, it was pretty evident that everybody was kind of operating in the dark, zero information at their fingertips, just A/B testing, trialing whatever they could, but really not having any data to back up their decision making.
And we're still in the infancy here of the entire business. Go ahead, you were going to say?
Yeah, I mean, that was sort of the catalyst to make the shift, right? Make the shift from the real estate investing side of things into, the data analytics, business that we have today. And a lot of that was because, I wasn't a real estate expert. I had never really done real estate. I fumbled around doing some lease arbitrage stuff. But when it came to, throwing a fund together, reaching out to get some real money, tens of millions of dollars to kind of go and amplify this strategy, it just wasn't a sweet spot that I was in. What I knew really, really well was databases, data architecture, I knew modeling, I knew algorithms, so that's what was all firing in my synapses was, that this short-term rental phenomenon was going to essentially, disrupt a lot of things. Hotels was the most obvious one. And, I spent a lot of time speaking at hotel conferences over the last, 3-4 years. But now, it's becoming it's permeating through the real estate investor community so much that it really is impacting, residential real estate values and how people are thinking about, how a property should be valued. Should it be valued basically just, what are the comps in the area selling and that's the valuation, or should it be more of the sort of discounted cash flow, valuation model, which is like, what is this house worth as a hotel room, as an investment property, and how much more cash can it kick out as a short-term rental or a long-term rental? And so that's what we're kind of helping people understand is where the biggest difference is between traditional, valuation models and the sort of discounted cash flow model that, it creates a lot more value for these properties than the traditional way of long-term renting or flipping and fixing.
So one of the lessons I kind of picked up from Warren Buffett's investment strategy is like you got to have a written investment philosophy, a set of rules, know why you're buying the assets you're buying and for what reasons. You should be able to explain that to somebody pretty simply. including yourself, before you make the purchase. And I have, in my 13 plus years in the business, encountered so many people. I've made the mistake myself. My dad made the mistake. A lot of people, hey, I'm going to get in real estate. We just buy like the first rental property that sort of feels like a good deal. And we're not really sure until several years in. For me, it was 10 years in before I figured out that I wanted to buy properties in areas I felt were increasing in value and had the potential for gentrification. So I was looking for lower priced areas that were a little bit rough, but were in advance of the growth. And so, okay, here's what I'm going to buy. And I ended up buying a few of them that went up, 30, 40, 50% in a period of the last 2 years. So I did well by thinking that out and not just getting any property that came across, and was available at the time. I'm in a great place where I have a ton of inventory to look at here with the deal flow that we have. But a lot of investors will basically, approach it like throwing darts. And I know that I have friends who, with the 25 properties, the same thing. It was kind of like we're throwing darts. We have this property we're flipping in whatever zip code in Chicago or whatever city it is, and we'll just list it on there and see what happens. That was basically how these locations were selected. Let's talk about this. How can the friend of mine who was accidentally selecting these locations? Airdna is a tool I've only just scratched the surface of myself, but can you talk about some of the things that would be important, how I could go in and maybe start to select based on zip codes and try to get maybe a better feel for where the opportunity is? Because that was the ultimate goal that you were trying to accomplish with the California market and trying to figure it out. And I think that those tools now exist as a result of that data scraping and putting it together in a readable format for me to now take that, Scott, and then select a better zip code so that, hey, if I'm going to buy this asset for the long term, I know this is going to be in an area that's going to grow along with the Airbnb trend, as opposed to something that I'm just throwing darts at the market trying to find something.
Sure. Yeah, I think first off, your sort of investment strategy is, the sort of perfect strategy for where Airbnb information is helpful, right? So before I get into the weeds, what we see is that Airbnb properties, really pop up in these sort of urban environments, really artistic kind of communities, people that are like looking to experience a new part of town. And so they're always coming up in these sort of, very central locations that might be a little bit rough and tumble, but, are these up and coming markets. And so we see that across the U.S., and there's these great kind of examples, everywhere, but Brooklyn's got 32,000 vacation rental properties there, that it exploded. Wow. There. Very few hotel rooms in Brooklyn, really kind of cool counterculture sort of stuff going on there. And everybody was choosing Airbnbs, and that, it flourished there really, really quickly. And so, our sort of information does kind of highlight, where cool millennial kids want to go stay. It also can be kind of a leading indicator on where properties are going to, where areas are going to gentrify and make a, pretty significant, recovery or, be the next cool place to live. But anyway, so what the tools that we have, how they help you do this. So, our flagship product is called Market Minder. And, Market Minder allows you to look at a city. So pull up whatever you want to say. So Denver, for example. And so you can actually see, in every single zip code or neighborhood within that city, we create a market grade. And this market grade is a F through A sort of a score. And we look at a bunch of different items for how that market grades as an Airbnb investment. The first and most obvious is, what is the investability score here? Which basically means, what is the difference between home values in this market and what short-term rental incomes are in this zip code. And so that is a really straightforward and simple way to say, where is the biggest, margin between housing costs and what short-term rentals are earning. We also layer in a bunch of stuff, which is, I'll try not to get too geeky, but it's, how quickly is a property able to get to full occupancy and revenue potential once it opens its doors, right? So it's sort of an absorption rate sort of measurement. We also look at sort of what would be called the same store sales numbers year over year. So properties available a year ago, it made 5,000, and then this year it made 5,500. Properties are making more today than they were yesterday, which means there's a lack of supply and still demand is outpacing supply. We look at sort of occupancy rates, we look at seasonality. We've kind of combined all of this stuff to create a single score for every zip code in the U.S. and every city around the world. And so that's kind of the easiest way to kind of the cheat sheet, right? Just go in there, click around, go to the different zip codes and see what the grades are that are the best. So that's the easy way to do it. So, yeah, I'm happy to elaborate on any of those things that, you'd want some more data on. But yeah, that's sort of the basic use case for the real estate investor coming in to Market Minder, is just, tell me where the best neighborhood is. Let me then look at what the top properties in that neighborhood are. So you can then say, okay, let me look at the 10, highest generating 2-bedroom properties in whatever it's going to be, Wrigleyville. And then, we'll sort it. We'll show you who the best running properties are. You can click through and look at their properties on Airbnb. And then you can say, all right, cool. This guy's location's amazing. He decorated it well. His pricing looks good. He does this on the weekends versus the weekdays. His occupancy rate is this. And so, we really help people sort of reverse engineer the best earning, the best performing properties on Airbnb. So that's what we see a lot of our people doing. It's sort of just like, all right, what are the best properties in my city? Where are they? Why are they doing so good? Let me buy the property next door and replicate it and not think too hard about why it's doing well. Just sort of, we know it works and replicate that. I'll mention one other tool, before jumping forward so we've created this tool called the Rentalizer. The Rentalizer allows you to enter in any address in the U.S. and we'll spit out what we think that property would earn as a short-term rental property. So this is, where all of our technology comes in. We pull in the closest comps. We look at like how those have performed. And then we look at your underlying property. We pull in a bunch of data from Zillow and then we say, all right, as an average vacation rental property, we think this would do, X amount of dollars over the next year with this occupancy rate at this sort of average daily rate. And so that's the most simple tool, for anybody that has a current property or is considering converting a long-term rental into a short-term rental. You come into the tool, you can do 5 searches for free and just put in the address and see what we think it would earn.
Nice. Is there a list? Let's say I want to go to Chicago or another city I'm not even familiar with where the best parts are. Is there some way to get your hands on a spit out or a ranking of maybe the zip codes or neighborhoods that might be the top 10? Or is that something that's kind of like a manual labor? I got to go through zip code by zip code in order to produce something like that.
Yeah, it's something that we've tried to solve, and we do have a product that is really it solves exactly that problem. It's called Investment Explorer. It's a bit more expensive. It's $200 a month for a state and $500 for the country, but it is the place you can go into any city, any state, and just say, hey, show me exactly where the best zip codes are in this state, even, and it just shows you basically based off of whatever kind of property you want to invest in, 1 bedroom, 2 bedroom, 4 bedroom, if you're looking to rent and re-rent or buy properties and rent them, it puts it on a visual chart, basically where we think the best zip codes in that city or state are. It's just, it's a bit of an older product I created a couple years ago. It does work well for just sort of ranking, where you should be sort of targeting, geographically for an investment. And then sort of that Market Minder is a good tool for really getting nerdy, getting into more of the details for that market once you've identified, what seems interesting.
Yeah, I don't use the Investment Explorer yet, but I am a customer and I am using the Market Minder and the Rentalizer both. We see, I don't know how many hundreds of deals every month I look at. And there's a lot of the deals, that don't fit. It's a good fit for me to buy a property for cash that's motivated because of condition. It needs a renovation. It needs someone like me to invest the capital and then turn around and sell it for a profit, refinance it, what have you. Earn the profit through investing the capital. A lot of people try to bring us stuff that's more retail ready, so I'm constantly plugging those addresses in, those zip codes in to both of those tools there, and I'm kind of determining and getting a better gut feel for where maybe I want to be based on things like the occupancy and the year-over-year revenue and all the other things that you mentioned that I don't remember the data points, but I know that it's it's been very eye-opening, and I'm grateful that this tool exists. And here we are only just a few years into, the industry in general, and we have something so powerful as this. Let me just switch gears here just a little bit, Scott. What, in your experience, if you have, because I assume you've probably looked at tons and tons more properties than I have so far over the years, is there an opportunity in certain areas or in any area for that matter to have like a little bit of a higher end or a more creative rehab, properties with rooftop decks or just like really, really cool kitchens or like anything of that nature where the condition would pull substantially higher rents or occupancy from, Airbnbs? Has it been like an assumption I could make that might be correct in some cases, or is that like a waste of money?
No, I mean, I think it's a really interesting question, and I don't know all the answers, but I do know some things that the data is pulled out, and the data is pulled out that sometimes investing in short-term rental is very counterintuitive to how people have thought about investing in long-term rentals or where people actually want to live. So like an example for this is like properties in, poor school districts, that is going to depress the price for somebody actually wanting to live in that property, but it has no bearing on somebody that wants to be there for 3 days for the football game. Right. And so there are a bunch of these sort of disparities. One could be traffic noise or even airport noise or things like that. Being on the busy street is something that has really zero impact on the short-term rental value and where you could maybe get a good deal on that underlying property. Things that perform really, really well are, any activities that you could do at the place, right? So pools and jacuzzis, crush it on Airbnb, in most markets. And that's like, a really good investment to be making in properties, maybe not from scratch, but building, buying properties that have that. And so same things with like fire pits or like other sort of things that kind of create this sort of vibe where people want to chill at that property, have something to do at that property. There's activities to do. That's always going to perform really well because people really aren't looking for just a place to lay their head at night. They're looking for a place to hang, to watch the game, to hang out by the pool. And so people are looking for experiences. So from a marketing perspective on existing properties and thinking when acquiring new properties, thinking about how you're going to kind of build out this sort of like cool bungalow vibe, pool area, game area, that stuff really, really does well. Sort of on the flip side, things that don't really translate, this might sound sort of silly, but people don't really care about like granite countertops or like crown molding or like they don't really care that like everything is like fit and finished and perfect for most vacation rentals unless you're trying to really compete for that super high premium customer. Typically, that money is better reinvested in like cool artwork and in like really kind of colorful furniture and nice bedspreads and like, so it really comes down to maybe not kind of fixing all the bones of the property. And it's really kind of about creating a nice marketable property with nice like landscaping and outdoor activities. It's typically a good way to think about it. But I think in general, I think the idea that where can you get a good deal on a property because for some reason it is not going to work well for a long-term tenant, right? And that is, school districts, crime rates, whatever it is, or kind of traditional playbook for where to find good properties. It isn't, where people are finding good deals for short-term rentals typically.
Gotcha. I'm glad you said that. I was under the assumption that you would have to renovate the property and really not necessarily like crown molding and like way over the top, fit and finishes, but I know you're not, to the other extreme trying to rent out something that still needs a rehab. But yeah, I would have thought the opposite way. And there you are telling me the truth, that the data has already spit out. Some of those things don't translate. Cool. Thank you, Scott.
No problem. And obviously these are all subjective sort of, and super high level. I would just say that people usually overdo it in terms of the rehabs on the properties, thinking that it has to be spotless to compete with a Hilton with like meticulous, no scratch, no blemish anywhere. And I think, people are expecting to be in a home. They're expecting some things to like not work perfectly. And that's sort of the charm of it. But, you can have holes in your walls and stuff, but, there's a limit. But I would say, don't go overboard. Set it up so like, it's clean and it looks decent and most things work. And then, if you want to start investing more money into that property in the off season, like in Chicago, maybe just shut down July, do a rehab in January and do a rehab and open it back up for the spring. You can always invest more in the property as you go along and see success.
Yeah, I really like the idea and the strategy. So a lot of times that philosophy I shared just a few moments ago about the gentrification play, I'm buying properties that are on rough blocks and are in rough condition, and I'm buying them very cheap, under $100,000. And, a few years later, they're worth in the same condition, $150,000, $200,000. That was previously my goal. However, with the Airbnb strategy, I've had the opportunity to get properties in like better areas, that I can spend a little more money on the renovation. And I feel like I have a comfort level of knowing that we're going in there cleaning I got a tenant in right now, 3 weeks, something like that. And they'll be out. We'll go in, clean, inspect, repair. So to me, it feels like it minimizes the risk of, tenant damages, bad tenant. I'm stuck with someone who's, a drunk who's bothering the other tenants in the building or something like that. I really love this strategy for some of those reasons to kind of mitigate the risk of the bad tenant. But can we just spend a moment here talking about, you mentioned regulatory risk. It's something I'm aware of. It's something I'm looking at here in Chicago and elsewhere where we consider these. Could you just talk a little bit about that for somebody who maybe didn't consider that, doesn't know what that is, and just, what your take and perspective is on that? Since you're looking at it with all these different markets, you've seen much more of these scenarios play out than we have in Chicago.
Yeah, complicated subject, obviously, but, so Airbnb exploded around 2013 is really when they sort of hit that hockey stick growth. And, what happened is what this growth was all mostly a majority of the properties that are on Airbnb were these sort of studio, 1-bedroom, 2-bedroom properties in metropolitan markets right next door to the hotels. And it, basically scared the shit out of hotels that this was going to disrupt everything they're doing, their pricing power, and it was going to forever disrupt their industry. And so, the hotel lobby, they got motivated, they got their things together. And so they started to really fight back against, what is, short-term rentals and, the fears of that and all the kind of impacts, as inflated and conflated as they may be, how is short-term rentals impacting, affordable housing? What is all the fear concerns about a stranger living next door to you and your kids? And so they've had, a lot of successful campaigns basically trying to convince people that short-term rentals are a bad idea. And so, that is the genesis of all regulation is really hotels, protecting their industry and making sure that this isn't a long-term disruptor of what they do. So in terms of how it's sort of materializing in different cities, it is a complicated subject. Some places like Arizona, statewide, they say you can't ban short-term rentals at all. And Utah and Florida and a bunch of other places have passed similar statewide legislation. But when the city council members are left to their own devices, they're going to come up with crazy things because they are getting this news from all the hotel lobby about, their homelessness and how it's being impacted by Airbnb, affordable housing, how it's ruining union jobs at the local hotel, blah, 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 blah. And so they've taken a bunch of knee-jerk reactions in different cities to, ban or cap short-term rentals in a bunch of different cities. There are some kind of good sources out there for looking at kind of what regulation is, and honestly, Airbnb itself probably is the best source these days where they talk about licensing, they talk about any sort of local regulations and limitations on it. So there are good sources out there. In general, we're at the first inning of, an extra innings game here. So, it is sort of hotels got well financed, fought short-term rentals really well, cities realized they may have gone a little bit over the top and that residents actually are depending on this money. Local businesses were thriving with this additional money and they don't mind having an additional 10, 20, 50, or even $100 million in additional tax revenue from this. So it's also really sort of shaking out. And fortunately or unfortunately, I've become sort of in the middle of this debate. And it's really, what is the net economic impact of short-term rentals? What is the impact on housing? What is the impact on the legal framework of property rights? And if consumers want to travel this way and get a better deal this way, why aren't we allowing consumers to pick the way that they want to travel? And so, there are all these unintended consequences that the hotel lobby is sort of making up out of thin air about kind of risk and about affordable housing. What I'm trying to do is really arm people to deconstruct those arguments and kind of prove out that they are, hocus pocus and not real issues, outside of a couple markets, maybe across the U.S.
Nice. Aside from the, thank you for that concise answer there on a very complex and convoluted question. Other than the regulatory risk, do you see any other risk or have a prediction on basically the direction of where Airbnb, and short-term rentals in general would be heading? And to give you the context, I see a lot of the charts and the charts go up. The revenue growth year over year is solid. Is there an economic people are traveling less where we could see a plummeting of revenues here, or is there maybe an oversupply where all of a sudden, we have too many people doing the rental arbitrage thing and it kind of, just makes the revenue decrease? I mean, what other risks there financially would you see from your perspective?
I mean, there's no doubt that lodging hospitality is the most cyclical business there is, right? When the economy turns, hotels feel it first and they feel it the worst. And there's no reason why that would be different to the Airbnb space. So there is definitely a very cyclical nature on lodging. My thought and my thesis is that there is so much more margin available on an Airbnb property and so much more flexibility in how you can reduce your rate that they will actually really win in a downturn, and hotels will feel the pain the most then, because they're operating much thinner margins with very heavy overhead in terms of staff and concierge and all the stuff that they have to do to manage a hotel that an Airbnb entrepreneur doesn't have. So there's definitely regulatory risk. I mean, just economic risk. From a regulatory side, I do feel like the pendulum's swinging back in terms of in favor of short-term rentals as more data gets out there, as really like how many people have had a livelihood for decades renting out their second home or have a property management business, and really how devastating these sort of strict regulations are on this entire industry, and how many fewer people can visit a town like Chicago. Like, I think there was analysis, and I don't remember the exact number, but it was 1 million-ish people, that they thought, would never go to Chicago if it wasn't for Airbnb, because they couldn't afford it. There was no availability, full occupancy at the hotels. And so, at the end of the day, cities are taking a step back and saying, do we want these people to come and spend money and visit our city, or not? And typically it's, they want that tourism dollars. In terms of other risk, I don't know. Like you said, Airbnb allows you this optionality. So if the short-term rentals are working great and that's the best way to utilize that space and monetize that space, great. If that doesn't become the case, there's always an optionality for long-term tenants or, sell the property. So for me, it's really just like, what is the best strategy for this property at this time? And right now, across the U.S., it is short-term rentals, because there just isn't enough hotels for people to stay in, and the economy is booming. But that might change year two for now. But you have that optionality when that time happens.
Not sure if you have the answer to this question, but do you know whether or not there's more business travel, personal travel, or, which? You did mention it was a millennial, cool millennial staying in an urban area earlier, but is there any data available as far as, who are these actual people who are staying in these short-term rentals? Yeah,
I think the biggest trends are group travel, family travel, and business travel, right? Leisure travel for a couple, this has been around, and like hotels still do pretty well in that. But, I think where people are investing a lot of money is in larger properties, 5+ bedrooms, accommodate 12+ people. That's a space that hotels can't compete in at all, and typically are undersupplied in a lot of like markets, even like a Chicago, but like Nashville, New Orleans, where people are going with all their buddies for a reunion or for a bachelor party. Those properties really crush. And so, also family travel is where, we see everybody choosing an Airbnb over a hotel, right? You got 2 kids. You don't really want to be in the same room. You don't want to buy 2 rooms. You want some privacy. You want to be able to buy some food at the grocery store. Families are choosing Airbnb at an alarming rate over hotels. So that's a huge area for growth. And then for business travel, it's a tougher sell, but business travel isn't just 3 days for a conference sort of travel anymore. There's a lot of people, on site at their other satellite office for weeks at a time. And how people are combining business and leisure travel together now that they have Airbnb optionality. So that's sort of like the biggest area for growth long term. At 30% of Airbnb travel right now is business travel. So if you are in an urban market, you should definitely be focusing on that business traveler, to get your sort of weekday booked, because that's when typically they're coming. So I would say in general, those are the three biggest trends. I did want to kind of go back to something I think I maybe missed in your last question, which was kind of where is this all heading, right? With a bunch of regulation, oversaturation of all these properties, like, what's new generally in terms of where the smart money is going. And I think a lot of people that I'm talking to is, they are trying to seize the opportunity in more regulation. More regulation to the one percenters is good because you have more certainty in like how many people can just turn on their property overnight. And it reduces a lot of this risk of just like, 84,000 properties on Airbnb. How am I supposed to make $1? So a lot of people are trying to find this kind of gray area in like the zoning, permitting, what types of properties maybe have some sort of commercial zone that can be converted into a hospitality zone, or where's the commercial zone property really just not being enforced and can become, a hotel property without any sort of interference. So a lot of people are trying to think about where are these gray areas, where are the opportunities, and one example, my buddy here in Denver has bought 4 churches. He's renovated them into like really epic Airbnbs that are very convertible. And they are in this like weird loophole where they are commercial properties and they can actually be rented on Airbnb, where and everywhere else in Denver, you can only have 1 unit supposedly, right? So, it is creating a lot of these kind of new opportunities for people that are thinking creatively out there.
I appreciate that. Is there anything else that I, in my ignorance of the industry, forgot to ask that you think is important you could share now?
I'd say for anybody out there that is in the short-term rental game, I mean, there is a need for everybody to be sort of vocal about, short-term rental, the necessity for them, the viability of them. So maybe more just a call to action is that, these are being discussed in hundreds of local municipalities currently. And if people don't kind of go up there and share their voice, the hotels are going to have a lot more of these victories before we can kind of win them back. So more of a call to action than an insight, but yeah.
Nice. Scott, if you had any book recommendations, I guess, because you're a unique guest, you're not just a real estate investor, you're an entrepreneur, you put together this cool company, this data set here, these tools. Do you have any book recommendations, 1 or 2, that you'd like to share? Could be entrepreneurial, real estate, Airbnb, short-term rental, etc.
Sure. Yeah, you're right. I don't read any real estate books. So my books are more kind of growing a tech business. So one of the ones I really like is The Hard Thing About Hard Things by Ben Horowitz. And it is kind of, the reason these tech companies have so much value is that we are solving hard problems, and just a nice narrative about how to kind of tackle big, hairy problems. I think was interesting. But yeah, what else? I don't know. I don't really have very many great recommendations. 5 Habits of Highly Successful People. I mean, I read all the top 10 list stuff too, right? So I'm not sure if I have any like real gems for this particular audience.
Are there any sources of information, specific to our niche here that people should be paying attention to if they're contemplating or already operating in this short-term rental space?
I mean, shameless plug. I mean, I think that's, where we come in. So not just like our products, but, definitely check out our blogs. We're trying to really do long form, deep learning into, what's effective, what's not effective, what are good markets to invest in. So, shameless plug there. I've got an ebook on the website too, which really talks through all the operational steps of setting up a property, furnishing it, marketing it, pricing it, which is the Airbnb Experts Playbook. So, definitely download that and peruse that. In terms of like other good sources of information out there, who are some good thought leaders out there these days? I don't really subscribe to a whole lot of them, but there is go to the VRMA website. They're kind of the association, and there's a lot of decent resources there for this space in general.
Appreciate that. If you could go back, maybe when you just left the job in Santa Monica, so, what was that, 6-7 years back now, something like that? If you could go back and share the crown jewel of wisdom when you were just starting off with the Airbnb, one unit, what would that be?
Yeah, I'm not sure if I have a great sentence, but I think what I realized was when I was thinking about being an entrepreneur and I was traveling the world for 6 months thinking about it is, what am I uniquely qualified to be the best in the world at? And that's a hard question, right? And it is like thinking about your background, thinking about your interests, your passions, your skill set, your capabilities, thinking about very micro level, like what do you think you can actually impart knowledge and be the best at it in the world at it. And I think a lot of people just like think too big and think too broad, and you really got to think very niche and own that niche, and that niche can grow over time. And so that's how I thought about what I did. How do I become the expert on Airbnb, on Airbnb analytics in particular? And over 4 years that becomes a big space, and there's lots of different ways to kind of grow from that small niche once you kind of own it. So what is the thing that you're most uniquely qualified to be the best in the world at is something that I ask myself a lot.
That was fantastic. I really strive myself to ask myself mentally better questions on a daily basis. How can I make more money easier? I love this one. What am I uniquely qualified to be the best in the world at? How can I make this happen? Is this possible? Can I make this easier? Can I make this more efficient? So, it's a solid extra question from my roster of, self-meditating questions that I've been keeping a list of. Thank you, Scott. I have several pages of notes here, ton of information, quite a few revelations. So I really appreciate you taking your time out here and sharing this last half hour or so with our audience. I really appreciate it, Scott.
Yeah, my pleasure, man. Thanks for having me.
One last thing before we roll. What's the website that people can get the information from?
Sure. Yeah, so the website's airdna.co. So not .com, .co.
All right, cool. Hey, thanks again for coming on the show.
Yeah, man. My pleasure. Thanks a lot.
And thank you for tuning in to this episode of the REI Diamond Show. Keep an eye out for the next episode. I am doing a me-only episode, that is Dan Breslin, on how to access consistent off-market deals by building VIP relationships for buyers, wholesalers, or agents. If you are a buyer, you can build VIP relationships with wholesalers and agents to consistently get first access look at their deal flow. I'm talking about the text message, the phone call, the email before the email blast or before the MLS listing. And if you're a wholesaler and or agent, you can develop strong relationships with repeat buyers who close often and quickly, in some cases 24 hours or less. You don't want to miss it. If you are interested in the pre-release of the next episode before the email goes out, please subscribe on YouTube or one of the podcasting apps, including iTunes, Google Play, or Stitcher. If you'd like to check out a free download of my book, Become a Wholesale Real Estate Master, please go to reidiamonds.com. Would you like to contact me? If you have a deal for sale, or maybe you'd like to suggest a guest to come on the show, or just say hello, you can reach out to me directly through reidiamonds.com. I am always buying houses, so I am always looking for deals in Chicago, Atlanta, Philadelphia, Miami, and Tampa. So if you have a deal, preferably one I can fix and flip, please send it over, reidiamonds.com. Also at that site, you can check out profitable real estate deals in those markets, along with the entire archive of the REI Diamond Show, totaling more than 120 content-rich, money-making, idea-packed episodes. Accredited investors are already earning double-digit returns passively in real estate. Are you? You can sign up to receive private mortgage investment opportunities to put your money to work for periods of 90 to 180 days, so it's quick turnaround, via email by going to superchargedreturns.com. Thanks again for tuning in to the REI Diamond Show. Dan Breslin here. I'll see you next time.
Thank you for listening to this episode of the REI Diamonds Show with Dan Breslin. To receive email notifications of new weekly episodes, sign up at www.reidiamonds.com.